Ladies and gentlemen, welcome back to the channel. We are a little bit late today, but better late than never. So we are in here. Hold on 1 second. Get this shit ready. How do you feel today? How was the Fed? How was the Fed? See, turn all this shit on. Yo. Yo. Welcome back. How are we doing tonight? Yo, Super Show. What's going on, brother? How'd you do today? Portfolio's looking nice. Real nice. So are we ever going to squeeze or what? This is getting pretty tiresome. Well, unfortunately, what we need to see is the markets coming down to really restrict a lot of that liquidity. Think about it like when shorts get a margin call, they can put up, bonds as collateral. They can put up stocks as collateral. They can put up cash as collateral. Likely other assets as well. A hedge fund could technically own real estate. They can own a bunch of shit, right? They can even own art, right? So you could put a lot of things up for collateral. Now, when everything gets destroyed, when stocks are down 23% on the year, even after today's move, they're still down almost 20% on the year. Bonds, they're worse off than the stock market. Real estate, that's obviously coming down. Everything is coming down in a very substantial way. So when you're thinking about a margin call turning into shorts covering, that's what it comes down to. How many assets do they have at their disposal to service that margin call? And we are getting ever so slightly closer to seeing the moment where, hey, when AMC stock does have another big catalyst, when it does go for another red box kind of run, they're not going to be able to stay in their short positions. That's why something like Redbox went parabolic. It wasn't because the company just transformed itself. It had nothing to do with that. It has to do with the market environment that we are currently in. Chris, Win Lambo. Ben Currington. Let's go, baby. You live in the UK, ain't that right? Shout out the UK. Hopefully no recession. So do you think AMC will go up in pre-market or down and at open? When it comes to AMC, it's a little bit interesting because we have earnings coming on Monday. So if earnings are on Monday, then you kind of get in this weird dilemma where a lot of stocks heading into earnings, they don't move all too much, right? Kind of like the Fed, like the markets today. We didn't move around that much at all. We were down 0.5%, then we were up 0.5%, and then we ultimately just ripped at the end of the day. It's kind of one of those quiet periods where people are getting ready for earnings. They're going to place their bets. The premiums will go up. So if you have calls or puts, I believe options will go up in value, anticipating earnings. But I'm not so sure how much the stock will actually go up until earnings. Now, good news is the Fed usually changes the markets for a while. The Fed is not usually a one-day pop and then a continued sell-off. Like, we should be good until the next CPI report or the next Fed meeting. So, if I were to make a educated guess, then I would say a 3 to 5% move tomorrow would not be, all too crazy out of the realms of possibilities. But still, we're kind of in that quiet period before earnings. Cool seeing you drop in on TWE stream. You guys should do a collab. TWE stream? Who's that? Who's TWE? I don't know what that stands for exactly. But I'm down. We can do a collab. I mean, I like to throw ideas off people and get different opinions, so that would be fun. I think once uncertainty is gone, AMC will must simply because the bears shorts won't have any other reason to drive down the price per share of AMC and GME without seeming really suspicious. By uncertainty, I'm referring to recession fears, interest rate hikes, and BNY, Ukraine, and Russia. Yeah, that's pretty much, where it is. Well, uncertainty too. You guys got to remember this. If there's anything you take away from any of these live streams, remember this throughout the rest of your life. No matter if it's a certain catalyst with a single stock or if it's the broad markets. The only thing the markets hate more than bad news is uncertainty. Like if we had got a 75 basis point rate hike today, it was widely not priced into the markets. People were kind of, thinking that it was a possibility. People were kind of uncertain and fearful about it. But even if we would have got something more aggressive, the market still probably would have went up. Maybe not 3% like we see today, but it's the uncertainty that people don't like. That's the biggest thing. You can handle COVID, right? Take that for an example. If you were in the markets during 2020, people were saying stocks were going to zero. The uncertainty was ridiculous. We shut down the economy. Uncertainty about all of it. Fed comes in and says, yeah, people are going to die. This is going to be bad for the economy, but we are going to support you guys. Boom. There's still uncertainty. There's still fear to a certain extent, but it's gone. Like we knew to a certain extent that we weren't going to have a 20% fatality rate. The whole world wasn't going to die. That, companies would eventually survive, even if they did take hits for a couple years. So uncertainty is a lot bigger of a problem than even fear is. Damn, thought you dropped in trading with emotions. No, I've never. Maybe I did. I don't know. I'm kind of everywhere. I like to indulge in a lot of financial education. It's like my secret pleasure. So thank you for exposing me, Maddie Matt. That's a great name. Maddie Matt. But, yeah. 2 days ago, I picked up another 15K of AMC and GME. I'm already up significantly. Oh, yeah. I mean, this is kind of like what we seen last time, right? The last Fed meeting kicked off this 200% rally we've seen. And it's starting to look really good right now. And we held up at 15. Like, we have not closed under 15 one day. We've went under 15, but we have always came up by the end of the day, no matter what the markets did at the end of the day. So at the end of the day, that's very important, and that is telling you something. And I think, given the multiple compression that we have seen, given the concerns about growth, given everything going on right now, and AMC is still holding up over 15, like, if I were to call a bottom at all ever based off of what's going on, with the economy, with the sentiment of the markets, it is right now. Not saying it couldn't go lower, but it's likely right now. Just wait till AMC actually does well, with earnings and prove these concepts that they put out about crypto, popcorn, all these other things. The business is going to do great. And it's going to be a great time to be a shareholder, that's for sure. They can't fix the problem just by giving dividends. They could fix the problem just by okay. I mean that's in the cards for 2022. Like, a dividend is in the cards. I don't see why not, as long as AMC was turns a profit. I don't see what that would do to, like, the bondholders. I don't see why that would be an issue. Maybe it's in there somewhere that they cannot give out a dividend, but by my calculations, if this is a really good movie theater year and these films do well and AMC can get their profit margins up to something like a sin mark around 6% instead of 2% in a good year, then they should make, $300 million, potentially more, give or take, around that range of profits this year. Now, the the percentage they can turn net profit. That's going to be the key, because usually AMC could only do 2% profit margin in a good year. Like 2018 was 2% profit margin, like 2.22%. Cinemark did like 6.5% profits. On a bad year like 2019, one of those 2018 was good. I think 2019 was bad. AMC lost 2%, right? Had a net loss of 2%. So that's going to be the key. And I think just given what has happened in the last 2 years, there's a crazy thing that just analysts don't fully realize, and they don't, granted, they probably don't walk into AMC every day and actually realize what's going on. But when you are forced to essentially almost go bankrupt, before you go bankrupt, don't you think you cut costs at any means necessary, right? You cut employees if that's what you have to do. You get your shit done a little bit quicker, right? You save as much money as possible. And you shut down businesses, which they have done a lot of those. I think they shut down like 100 theaters, give or take, in the last 2 years, maybe more. And when you do that, you help your profit margins when things go back to normal, because you stop doing things that were essentially fat on the business and not helping the business. So I think that if there was one thing that I think AMC, quote unquote, YouTubers and analysts don't appreciate, is the way that these profit margins are going to be much better from here on out. They're not reopening any of those those money-losing movie theaters. They're not doing that. That's going to be a negative gone, because all it comes down to, especially in this market, is profits. That's it. That's all that matters. You're not, you ain't valuing a company off price to sales anymore. You can have Fubo that's trading at a 0.75 price to sales ratio, and they will still sell that stock off into the ground. But it's very, very cheap on paper, but they don't have any earnings. Thoughts on bull trap? I think this whole market's a bull trap, to be honest. But you can get weeks that are really good. Like the whole rally we seen during the last Fed meeting, that lasted like 2.5 weeks-ish, give or take, right? And the markets had a very historical rally. I believe this was like a 10% rally in the markets within that 2-week time frame. So I think the whole market's a bull trap. Like eventually we are going down, and likely well under 400 on the S&P. A lot of stocks are already down. Like look at PayPal. If PayPal was the S&P, PayPal is right here, down here at like 215. It's already well under its pre-2020 levels. Well under. A lot of stocks are well under those levels. The largest play, they have not been sold off that dramatic because the fundamentals have supported, to a certain extent, their valuations. Now, I will tell you, when Tesla's, a top 5 weighting in the S&P now, once those kind of stocks start to take dramatic year-over-year revenue hits, and people start to question their growth. Like, people don't even hardly question like an Apple growth or a Tesla growth or a Microsoft growth. Once those stocks, their growth goes into question and they control like 50% of the NASDAQ weighting, that's when the markets will fall. And it will come down to what the Fed does, how much they destroy demand, aka demand destruction. If you have never heard that term, you're going to hear that a lot in the next 6 to 12 months. Depending how hard that is and how much it hurts these companies, that's when you will get the actual crash. It'll likely happen around earnings time, to be honest with you guys, too. Earnings are bad. Just imagine if Apple would have had bad earnings. Like if Apple would have biffed it. Dude, we would have fell under 400 on the SPY. And that could have started a chain reaction. And then tying that back to AMC, that's when you could expect to see more margin calls that turn into forced liquidations if AMC gets a catalyst in that meantime. So I don't know. I think it's good. I think the whole market is a bull trap, though. I mean, like don't think this is like all-time highs. That's not the case. But could you head back up to 438, 440 on the SPY? Absolutely. That's what I expect. There's a lot of people with puts. There's a lot of people with shorts right now. And it works the same way when you buy calls on a stock, right? Everybody starts to buy calls, especially ones that are in the money with a low break even. Market makers, they have to go out and buy the stock on the open market, push the stock up. Happens same way to the downside. When these institutional hedge fund investors, when they're buying options and they are the big money in the markets, they're not buying far out the money options where the market makers never have to hedge for them because they're so low probability. Like if you're buying a 20% SPY put or call out the money, or even a 10%, the market makers do not ever have to hedge those. So it's basically giving them free money. Now, when you go ahead and buy, say, a put with a 0.25% break even, and the SPY's moving 3, 4, 5% in a day, they gotta hedge out those puts that you are buying, and that's obviously the big money. So I think you're gonna have a lot more of this de-hedging that especially happens here over the next couple of days. To end out this week, I think you're definitely getting close to that 440. But bro, have a good night. I hope you're having a good one. Alvaro Velasca, I am having a great one. I hope you do as well, brother. Tickle that like pickle. Don't short the like button. Tap, tickle, touch, or smash that like button, baby. Who remembers when I used to say that? Say tap, tickle, touch, or smash the like button. It was great. Those were the good old days. Those were the good old days when AMC was like $50, $60, $70. Those were great. Can you check or text on ATVI? That's Activision, huh? Activision Blizzard. Be careful with Activision because I believe they confirm the buyout price. So that's the only thing you want to be concerned about. And just so everybody knows, right? When there's a buyout, say like Twitter at $54.20 per share. Shout out Elon and 420 there. But the stock will only go as high as that buyout price. It's not going to go above 54.20. So when you buy options, you have to factor that in. Like if the Activision May 20th $80 call has open interest, a lot of open interest, like you're saying, Super Show. If the break even's like $82, that's great. But you know why there's call it a high premium on that? You can only make 100% on that option because it's basically betting that the deal closes by May 20th. If the deal does not close by May 20th, then you're gonna lose money on that option. The key is with a lot of buyouts, if you want to play it like that, the best thing to do is just buy shares because you're gonna get like, what is that, $6 per share almost on your shares, pretty much as an arbitrage play, like Warren Buffett is buying Activision. So if he's doing it, then I have full confidence that, I mean, it's probably going to go through. So that's essentially free money as long as it obviously goes through, or buy longer dated options because these kind of buyouts, they can take months or they can take a year. You never really know. And that's the real risk because one day you're going to wake up, the stock's going to be at whatever the buyout price was, like 84, something along those lines, and it will just stay there all day. But until that happens, it's going to move around, but it's not going to move around all too much. But it will not go over the buyout price. Just remember that all the time. CAMC rising until earnings and selling off like every other earnings. Adam Aaron already said, don't be surprised with lower revenue this quarter and the shorts will take advantage. Yeah, see money. That's a good point, and I'm glad you point that out. But it all comes down to market's expectation and market's pricing. So Adam Aaron might have been sandbagging last earnings. And if you guys don't know what sandbagging is, let me tell you, it's where a company says, hey, we're not expecting great things next quarter. It can depend. They could say growth is slowing down, demand's going away, something along those lines. Give lower guidance, which Adam Aaron did last quarter. You know what that does, right? It sets really low expectations, really, really low. So let's throw out a number here. Let's say they're expecting $500 million of revenue, right? Top line, just revenue. Well, if AMC comes in at 700 million or a billion, it's a very positive thing, even though it might be lower than what they did last quarter. It's setting low expectations to be able to beat them a lot easier. And that's what can set up for massive rallies on earnings. Like, I'm telling you right now, PayPal, that is going to have a massive rally one of these earnings because they continuously guide down and sandbag every time. Eventually, they're going to beat it in a massive way, and the stock's going to go up 20, 25, 30%. I'll just throw that one out there. That's one that I'm waiting for. It's so obvious they do it, but you just don't know. You just don't know when it's going to be. But it is, it's good. ATVI, though, we will look at the short interest. Activision has, 2.34% short interest. That's like a clapping waiting to happen. Which, it's surprising it's actually high right now. Some people are not expecting the deal to go through. Like, if the deal does not go through on Activision, this thing's probably dropping to $60-some, if not less. So that's the real risk there, I guess you could call it. Oh, shoot. Lots of puts. What the hell? That's unusual. That's unusual. January 19, 2024, $95 puts. Like, massive amounts, too. 1.16 million, 4.25 million, 4.31 million, 1.69 million, 1.72 million. What's that, like 7 or 8 million on long, and some of these September, June, January 2024 puts. That's unusual. That makes me want to buy a put. Honestly, you don't see stuff like that. Thoughts, last earnings wasn't terrible. I'm thinking they finally beat one. I feel like DraftKings is so tied to football more than anything. So it's one of those seasonal things. Let's go ahead and take a look at DraftKings and see if we can get an estimate for their earnings. This is one I own a lot of, and I'm down over 50. Like, I'm clapped on this. It says short-term and mid-term positive. I have not looked at the Ortex data or anything really on DraftKings in a while. It's one that I like the name. I personally won $50 last Super Bowl, and it's kind of one of those where I'm down with it. I'm kind of down with it. Oh, it says insiders have been buying. Yeah, they've been buying a lot, huh? Well, kind of. Yeah, it says over the last 3 months, insiders have sold $325,000 worth and bought $4.61 million worth. So a much higher, they're buying more than 10 times the amount of shares they've been selling in the last 3 months. So obviously, to me, it looks like they think DraftKings is overvalued in the 50s, but kind of undervalued in the, under 30. So that's really good. You want to see insider buying. I wouldn't expect that, honestly. Yeah, lots of call activity too. Jeez, holy shit. That's insane, honestly. Yeah, lots of call activity. 43 orders totaling $6.6 million. Positive order value of 77% over the past week. Lots of the 15 and to 1650 calls coming through for May 13th, May 20th, and even tomorrow. Holy shit. Or Friday. Yeah, a lot of people look at that. Look at all the 1650 calls coming through for Friday. It's not a huge amount, but 29,000, 25,000, 30,000, 28,000, 36,000, 28,000, 54,000. That's all the same person too. You can see the time in here, or the same firm. Interesting. So somebody's expecting a big move by Friday. I think it's probably a good bet. I mean, you usually see a lot of weird option activity by, institutions, because they, like, before a specific move on earnings because they tend to know things before we do. Like they tend to know like executives at DraftKings and they go out to dinners. Like you've never heard of like a round table dinner to kind of discuss these kind of things. Like they do that. They do that. So that's interesting. Short interest of 13.37%. Not crazy, but it's high still. Interesting. Yeah, I wouldn't bet against it given it's fallen so much and all that, but I think it's good. Mara and Murr. Mara just trades off of Bitcoin. Like if you put Mara and Bitcoin like together, look at a chart, they look for the most part similar. 5 buys, 0 sells. Option activity looks good. 19.29% short interest. Cost to borrow 14.39. Cost to borrow average of almost 9. Utilization of 100% and days cover at 4.40. What happened with Mara earnings? What do you mean? Did I miss something? Did Mara report? What you mean? Nah. Callie, bring the pizza. I feel you. Suck my mask. How is it going? Mara had earnings today. Are you sure? Am I tripping? Like it didn't move at all, did it? Oh, yeah. No, that's interesting. Um, that's weird. That's really weird. It did not do anything. Yeah, it doesn't look like it did anything. It probably met expectations. Like it was probably one of those reports like there wasn't anything too bad or there wasn't anything that was really good, you know. Not a reason to sell it off 20%, not a reason to pop it 5 or 10% either. That's the kind of market that we are in. If, you know, a stock has good earnings, if it's not like good or something that is positive to latch onto, then these stocks they're not going to, you know, go up a lot. If there's something bad, even one thing that people can latch onto, anything to do with growth slowing down, you're going down 20%. That's just it. GFYM. Code or text. Chinese ticker knew it has been halted twice in the last 3 days. Yeah, I don't know if this is the one. Pooksin. Yeah, I would halt that. I would halt that ticker too, or that name. Pooksin. Pooksin. Um. I don't know what that ticker is. GFY. Company is called Pooksin Ltd. Yeah, it looks like it's got really low volume or like activity in general. Yeah, very low liquidity. Yeah, and China, I mean, if it's a Chinese company, I would stay far away from it, you know. Oh, everything's coming back a little bit. Oh, hey, y'all, blew up my account, but I'm still here. And we'll be like cockroach, going to bounce back stronger. I promise, man, I feel you. The scalps have been tough lately, brother. But you will bounce back. I bought my calls today. I was pretty confident. Now, not too much. Thanks for looking at it. Yeah, I'm like, I'm kind of over this earnings season in a way. Like, we have earnings coming tomorrow, but I'm kind of just over it. Like, even if Lucid, even if these other companies, post good numbers and they're growing and doing well right on schedule, they're probably still gonna go down or slightly move up. Like, the expected moves by market makers have been insane. Like, even on AMD or on Airbnb, the expected moves have been almost 10%. So it's like, if they don't move 10%, you're going to lose money on these options. And the odds that even if they're good or bad, or especially if they're good, they're going to move 10% to the upside is just very unlikely right now. But we do have big earnings tomorrow. Block or Square, whatever you want to call it. Fubo, Lucid, those are going to be the big ones I want to see. Open Door, that could be interesting. DoorDash, that moved big last time, like 23, 24% last earnings. Cloudflare, also going to be big. Eight 8K in like 3 weeks, just trying to get this damn 25K PDT. It's the biggest scam in the market, in my opinion. Yeah, yeah. The 25K PDT is yeah, pretty much a scam, but you could still like buy the call, buy the put, and then sell another one, like ghetto spread it, or just legging into a vertical spread, and make day trades like that and just turn them into debit spreads. But that gets kind of annoying too. May the Fed be with it. Oh, it's a Lou phrase. Okay. Yeah, I don't like ever watch Lou. So the algorithms controlling AMC such GME price action. They're controlling everything. Algorithms control everything. We don't even trade anymore. The algorithms trade off each other. That's it. That's it. Vanguard, it's a big shareholder. They own like 8K in them. Yeah, Vanguard owns like everything. It's terrible. What do you set your stop loss to on large trades? Well, depends what platform I'm using. If I'm using Robinhood, I don't even bother. If I'm using like a E-Trade, I'll usually do like 3-ish%. But it depends what kind of trade it is. Like, if it's a short term, like with less time, or if it's a longer term trade, if it's got a lot of time, I'm not gonna set a stop loss on it. If it's like a weekly option, if I can't watch the chart and watch the trade, I'm probably not gonna make the trade anyways. But usually, 3 to 10% ish, depending how confident I am in one direction or the other. But it don't even matter. I mean, you could be right. Like, I was right on my scalp trade all day this day, and I was up like 100%, right? This day where it hit 405, and they were printing. Big trade too. I was up like 100%. Maybe it was up like $5,000, something like that. And literally in the last hour, I ended up losing $200 on it because I was like, either way this goes, this is a bagger. I had something to do. I forgot what I did. But it was only like 10 minutes I walked away from it. I was like substantially positive. I'm like, no way, the last hour, this thing's going to come back and I'm going to lose money on this. And sure as shit, that's what happened. That's what happened. like a 5K profit into a couple $100 loss. I'm like, dude, just get the fuck out. I'm like, this is ridiculous. So that's kind of, you know, who owns or has the algorithms. Citadel, the banks, Virtue. Those are going to be your big guys. Like Goldman Sachs, Virtue, and Citadel. Those are the largest 3 algos, but all banks, they have their own version of algos. Yeah, Lou is strictly for comedic relief. Yeah, Lou's kind of funny sometimes. Like if I don't watch like a string of videos, like I think I seen one today and I was like, what is he talking about? I had no idea. Like the whole video, like the whole like 2-minute long video made no sense because I hadn't seen the other ones. But yeah, futures are coming back up right now. They are almost positive. Oil is up almost 0.5%. The treasury rates are going up again, which is not so much a good thing. You want to see the rates actually come down a little bit. That's good. But I'm going to go ahead and get off here. I was late to the party. I do apologize. There's some things I wanted to talk about. But we'll be back 10 p.m. tomorrow. We're live. We're in there, baby. So thank you guys for tuning in. Hit the like button. Subscribe to the channel. If you guys want to come trade with me live in real time, link down below in the description of this video. You guys enjoy your